want to know why the Rockefellers or the Kennedys thrived during the Great Depression while others stood in breadlines? It wasn't luck, it was strategy. Now, I've helped hundreds of people take control of their finances and build wealth outside the stock market. And this strategy that I'm going to talk about is one of the biggest reasons why. Now, let's give you an idea of what was happening during the Great Depression. Because during the Great Depression, we were seeing banks failing left and right. There were 35,000 banks in 1929, but by 1935, only 13,000 were left standing. That means about 2/3 of banks failed in just 6 years. And another thing that people did is they were gambling their money. Remember the Roaring 20s? The Roaring 20s, it felt like nothing could go wrong. This is kind of like the Roaring 2020s in some ways, right? And this is what happens every time. Before there's a big financial collapse, there's always excessive debt and there's speculation or gambling happening. Now, when I mentioned about the Rockefellers and the Kennedys, they were doing something very, very different. For example, in 1929, there's a lot of stories that swirl around about Joseph Kennedy. This is the father of John F. Kennedy, who was president. And it was kind of rumored that he was one day asking a shoeshine boy, he says, hey, what have you heard from other people? Like, where should we be investing? He's like, oh, I just did this other guy's shoes. They're all saying, invest in the stock market, do this, do this. And then that's when Joseph Kennedy said, you know what, maybe I should reconsider and get my money out of the market. Some people thought maybe he had insider trading or whatever, and maybe that's true, maybe it wasn't. And understand, in 1929, Joseph Kennedy was only worth $4 million. But by 1935, remember after all these banks have failed, he was worth over $100 million. How? And by the way, the Rockefellers, they had built up a massive, massive amount of wealth. How is it that they were able to keep building it from generation to generation to generation? This is the one secret that nobody does in the Great Depression. And it's simply this. They were liquid. I don't mean liquid like, I'm talking about liquid with money. They had cash available. They had money available. They didn't try to gamble it all away. They weren't just trying to throw it places to gamble it. They had money available. Because here's the best way, especially as we're moving into a recession right now, the best way to profit from a recession is, and by the way, arguably that we're already in a recession, have been for a couple years, but the best way to profit from a recession is to have liquid cash. That is what they did. They had liquid cash available to use. So Joseph Kennedy, going back to his example, what did he do? He went and bought everything at a deep, deep discount because during the Great Depression, people were gambling their money. They had it all out invested. This is like people in 2021, 2022. They're saying, oh, inflation is horrible, so invest everything in the stock market. Well, what happens when that collapses? What happens when you lose all that money? What happens if banks do start collapsing some more and they tell you, hey, we can't give you that money back because FDIC, sorry, only has 1.5% of your money actually in savings. Sorry about that. If you have that situation, you don't have cash. The person with cash will make the rules, right? The person with the gold makes the rules, the golden rule, right? Well, the person with cash during hard times is who rules the world, literally. Joseph Kennedy was able to buy real estate in New York, commercial real estate, for deep, deep discounts. That's how, because as things started to recover a little bit, that $4 million net worth now became $100 million as that real estate property started to take off again. That is how he did it. He bought it dirt cheap. He bought it on a massive sale. The way the Rockefellers did this, they did the same thing, but they held their cash in a different place. They didn't keep it in banks, right? They weren't trusting banks. I'm sure Joseph Kennedy also wasn't trusting banks a lot either. They were keeping their money in life insurance, whole life insurance to be exact. I'll tell you, when I was a financial advisor, I was shocked because I'm like, this is the most boring thing you could possibly get. Whole life insurance, it pays you nothing. I didn't know that for a fact. I just repeated what other financial advisors taught me. But when I found out that these guys were using whole life insurance, and they weren't just using it to store cash, but they were using it actually to invest as well. See, the Rockefellers, what they've done, they would buy policies on all their family members. And as those family members pass away, that money will pay into their trust and build up the trust. But see, they wouldn't just pay out their heirs, like trust fund babies, right? Like for example, the bad example would be the Vanderbilts. The Vanderbilts by the third generation. If you've ever seen Anderson Cooper, on the news, Anderson Cooper is a third generation Vanderbilt. He was only gifted about $100,000. That's all that was left of that massive empire the Vanderbilts had built. But the Rockefellers did it differently. They said, no. You're not just getting money and just throwing it to the wolves, so to speak. We're actually gonna make you borrow the money from our family bank, which of course is being funded by the life insurance. And so they would borrow the money, but they would have to pay it back in so that generationally, the money and the wealth would have to keep growing and growing and growing generation after generation after generation. Now, it's not just good after people die, it's actually good while you're alive. Not only is this like a tax-free high yield savings account, right? By the way, it's paying right around 6% a year tax-free. By the way, did you know that the next 10 years, Vanguard only estimated the stock market to do about 2.8 to 4.8% average per year? That's nothing. So literally, I can make more money with less risk, no market risk inside a whole life insurance where it's not just a death benefit, there's this tax-free savings account inside of it that builds cash. By the way, during the Great Depression, guess who also used it? JCPenney's. They used it to pay their actual employees payroll when they were tight on cash. They started dipping into their funds. Who else used it? Walt Disney. Now, he didn't use it during the Great Depression. He used it after he had more money after the Great Depression. He used it to actually finance Disneyland. He couldn't get a bank to go in all the way. He finally got ABC, who was a struggling news station at the time. He got ABC to go in with some money if he came up with his own cash. He sold off an investment property and he tapped into his life insurance to be able to put the cash in, so then ABC would come with the rest. And well, the rest is history. Pampered Chef, did you know that she started her company using this same kind of account? McDonald's, Ray Kroc used this to pay his key executives when he bought it from the McDonald's brothers. Again, this has been used over and over. We even had a guy named Eddie Wilson on our company. He's bought and sold businesses left and right. His family has used it for generations, for 3 generations. Ever since his dad was a bank president, they've been doing the same strategy. Not storing money in the bank, they've been using this instead. Having liquid cash is what's essential, especially if we move into recession like it seems like we're moving into right now. This could be your best time to be able to create massive, massive wealth. But the key is you have to have the cash to be able to make those investments. All right, so how do you learn more about this wonderful world of infinite banking and how to actually make it work for you today, not just down the road in the future? One, if you haven't subscribed to this channel, do so, because we got plenty of videos on here, including this video that you should check out right now.